Hello, and welcome to myfinancesteacher.org. Let's have a review of the gold market and a very brief, quick look at the general stock market. Before we continue, let me remind you guys to subscribe to the channel if you haven't and click that bell notification. Thanks a lot. Looking at the gold market, we see a nice hammer on Friday with a deep down into below 1750. And in case that was an indication of the reversal of the recent trend in gold price going up, in case if gold price was ready to drop back down into the short-term daily cycle low and possibly later into the intermediate cycle low, we were ready at myfinancesteacher.org with our stop losses on GDX and GDXJ. Luckily, these stop losses were not triggered, and gold, together with the gold miners, bounced up all within Friday. And although today, on early Monday, we see a red candle on gold, I think there is a good chance that gold continues this upward momentum to poke another couple of times above the upper range of the Bollinger Bands and reach a little bit closer to $1,800. If you look at some of the older videos, you'll see that that's been our target for the last couple of months or earlier. I think there is a pretty good chance for gold to reach closer to $1,800, possibly over the next 1 or 2 weeks, and the reasons for that are as follows. Firstly, the short-term daily cycle is not that mature yet. It's not that young either. It's 24 days old at the moment, but as these usually last for about a couple of months, I think there is still a chance that gold gives us 1 more week higher. If it doesn't actually reach exactly $1,800, anything above, let's say, 1,790 would be close enough for me. That's when I would consider selling a large chunk of my positions. And if that happens after several days, gold might be close to, let's say, 30 days on the ongoing short-term daily cycle. Then the regular duration of these cycles would give gold another couple of weeks to slide down. So the first reason for my cautious optimism over the next short term is the duration of this short-term daily cycle. Second reason for my optimism is the 14-day RSI, which hasn't reached into overbought levels during this intermediate cycle all the way since mid of March yet. And I think there is still a good chance for RSI to inch a little bit closer towards that overbought level. At the moment, RSI is only at about 62.7. And thirdly, looking at the gold optimism index from Sentiment Trader, we see that although gold is pretty high on its optimism index at the moment, meaning that too many people on the market are optimistic and it might be time to cool off pretty soon, there is still some room for optimism to increase a little bit further into extremely optimistic, as it did in early April this year and near the top of the previous intermediate cycle, somewhere in February last year. So the optimism index also confirms our ideas that gold possibly has some potential to inch a little bit higher towards that $1,800, but we are also getting a little bit close to extreme optimism. So that moves us into the cautious side of the trade, and that's the duration of the intermediate cycle, which has already been going on for 101 days. Usually these last for about half a year. So the ongoing intermediate cycle is already past its midpoint, past the 3 months duration, meaning that after we take possibly another 3 weeks or so to finish the ongoing short-term daily cycle, there might be another bounce into another short-term daily cycle, which would be just a counter trend bounce, as the intermediate cycle would already be in the declining phase. And as I often mention in my older videos, declines in intermediate cycles do often give us a short-term bounce followed by a lower low. And as the next short-term daily cycle in gold also turns back down, that's possibly when we will see the end of the intermediate cycle in gold, possibly somewhere close to the end of summer, giving us somewhat of a half a year cycle in gold. So the fact that intermediate cycle is already past its most likely midpoint gives me a reason to be somewhat cautious on gold in general. Although in the short term, I want to try to catch that move towards 1,800. And as I mentioned to the members at myfinancesteacher.org, at the moment I'm still holding around 97% allocation in my gold-related part of the investment portfolio. With GDX, GDXJ being the largest chunk of that 97% allocation, let's have a look at GDX. So far GDX is still fine, although it hasn't closed this gap from last week. The gap would be closed if GDX reaches the high from the 19th of June, which is at 33.84. So as gold is giving us a red candle for today, so far on Monday, maybe there is a chance that GDX actually closes this gap before continuing a little bit higher, since again RSI is even below 60, it's at 57.3, and if gold tests $1,800, I think there is a good chance for GDX to test that long-term resistance zone of $39 that we've been talking about for quite a while. Now looking at Bollinger Bands, even though a few days ago GDX did poke through the upper range of the Bollinger Bands, which is usually a cautionary sign, still Bollinger Bands at the moment are pretty narrow, meaning that a stronger stab through the Bollinger Bands is quite likely. So that stab might actually be a test of that resistance zone over the next few days. So let's see what happens on gold miners. Next, looking at silver optics. Optimism index on silver is just around 60, which is far from extreme optimism, meaning that there is still a chance for silver to push quite considerably higher. But on the other hand, over the last few years, it's been rare for optimism on silver to poke through 70. So is this the year when silver breaks through into extreme optimism? Well, possibly not, as the gold's intermediate cycle is already past the midpoint, and the optimism on silver is only at about 60. So again, some room to move up, but I want to be cautious as we are not that early in the intermediate cycle anymore. But within those 97% allocation, I do hold quite a lot of silver and silver miners. Next, let's have a look at general stock market very briefly. S&P 500 continues to decline, just as we've been expecting. S&P has already closed below the 200-day moving average, which is not that great for the stock markets. And over the next few days, I think it's very likely that S&P will poke several times through the lower range of the Bollinger Bands and through the 50-day moving average. That will probably happen as the ongoing short-term daily cycle stretches into its regular duration of around a couple of months for the general stock market. So, as I've reported to the members at myfinancesteacher.org, my allocation to the general stock market at the moment are 0. And lastly, a quick look at the optimism index for S&P 500. As mentioned before, we see a decline in optimism, and we're still pretty high, with optimism above 60 on S&P 500. And I think over the next couple of weeks, this index reaches into mid-50s before short-term bounce. As I said, as the short-term daily cycle finishes, we might see a short-term bounce into the next short-term daily cycle, followed by a decline into the end of the intermediate cycle in the general stock market. That's all for this quick review. I hope you guys had a nice weekend. I wish you to have a nice Monday as well. I also wish you hit that like button, subscribe to the channel if you haven't, and good luck in your trades.